Hey everybody, it's Ariane with Investing Architect, and today I wanted to discuss the ideas in one of the most popular articles that I've written for Investing Architect. I think I wrote it back in 2012, and it addresses the question why investing in condominiums does not make sense in the Houston real estate market, and what you should invest in instead to get some of the same benefits that condos offer, but without all of the drawbacks. So let's dive in. So condos tend to be thought of as great investments because they certainly have some good things and pros going for them. The main one of them is the location. Condos tend to be centrally located, close to centers of employment, close to where all of the, lifestyle activities are, restaurants, bars, museums, culture, right? So they tend to be centrally located and people like that. And certainly tenants like that, so that results in high tenant demand. There's always people looking to live in those locations, and they tend to be smaller, right? So people think of them as easier to manage because it might be a 1 or 2 bedroom condo. Anytime you turn it over, it's not as much work like a bigger house would have. So they tend to be thought of as perfect investments for that reason. But in my opinion, condos don't make good investments because the significant drawbacks that they have far outweigh all of the pros that we mentioned. The major drawback of a condo is that their operating expense structure is a lot higher than that of a similar townhome or a single family home. And the main reason for that is the presence of high monthly homeowner association or building dues. So when you take a condo, let's say you take a condo that's $200,000, right? That condo is going to have homeowner association dues anywhere between $3 to $5 to sometimes $600 per month that the investor has to cover. So when you look at it from the operating expense percentage perspective, a $200,000 condo has operating expenses similar to, say, a $300,000 home. So as a result of that, condos tend to not cash flow very well unless you have a really high percentage of equity, meaning 40%, 50%, or 100% down in order to make them cash flow, because the homeowner association dues are consuming a large portion of the cash flow. But the second drawback to condos, I think it's a little bit more insidious, and it's the lack of control, right? So what do I mean by that? Well, when it comes to financing condos, one of the factors that is critical in a condo being able to qualify for a certain type of financing is the occupancy percentage, right? So if you have a condo building that has 75 units, usually most financing options will require that condo to be at a very minimum 50% owner occupied, and in some cases as high as 70% owner occupied in order for that condo to be able to be financed. So what can happen over time is you could purchase a condo that has a high enough owner occupancy percentage, but then what will happen is, over time, some of the owners in the area might turn their condos into rentals. And once your occupancy percentage drops below those threshold levels, then it becomes very hard for you to sell that condo and to exit that investment later on, because the only people that could buy it are cash buyers, and cash buyers tend to negotiate a little harder on price than, say, a financed buyer. The second issue that has to do with control is in the event of like an insurance claim. Let's say there's a hurricane that comes through and there's roof damage. The investor does not have the option of taking care of that item quickly and resuming the normal operation of that condo. We had a situation a couple of years ago with a condo in the medical center where after a hurricane, there was some roof damage in one of the buildings, and it took the homeowner association about 6 months to get that repair completed, right? Because they had to negotiate with the insurance company and figure out the deductible and there was an order of buildings that were being taken care of. So all that the investor could do during that 6-month period is grin and bear it, right? The tenant had already moved out because obviously there was a hole in the ceiling, and they had no choice. They had no control over getting this repair done unless they wanted to spend the significant amount of money that it took to fix their unit. But that just wasn't even an option in this case. So that lack of control bothers me from an investment standpoint. So for those reasons, I don't think that condos make good investments from a pure investment standpoint. If you want to live in it for a while, or if you've owned a condo and lived in it, and now you want to turn it into a rental, that may change the equation a little bit. But if you're an investor and you've got capital available and you're trying to allocate, trying to decide what type of property I should invest this in, condos, in my opinion, don't make good investments. So what should you invest the money instead if you're looking for something that's centrally located? If you're looking for something that might be a little bit smaller, if you're looking for something that the tenant demand is high like they are in the condos, what I recommend is that you can invest in townhomes, either attached or detached in the city. And that will give you all of those benefits. So they'll be centrally located. They will be, have high tenant demand. They tend to be smaller than your single family homes, but they don't have the drawbacks of the lack of control that condos have. And they don't have the high homeowner association dues, right? So from an operating perspective, they're lower than condos, and they have so you basically have all the benefits, but none of the drawbacks. So again, this is Arion with Investing Architect. That was my take on why investing in condos in Houston does not make sense and what you should do instead. I hope this was helpful for you. Thanks for listening.